In sharp contrast to the earlier chart pattern example case study of Pinterest stock chart, this chart demonstrates a bearish to neutral start to trading on the stock market. Regardless, the simple technique of marking open, high, low, and close prices from the first day of trading provides a valid long-term range to reference. The IPO range mainly comprises the price action of a triple bottom range concentrated in the lower 20s. It is not as clear with a chart of closing prices, since the first upswing in October is from a candle with a long lower wick extending down to 2046, where subsequent upswings form. Resistance back over the IPO price of 27 and current record highs at 27.98 is firm, but overcome with a strong and stable completion of the triple bottom range, which has an expanded upper boundary. This is due to the close proximity of the IPO price before the triple bottom breakout. This is essentially a regular flat triple bottom, with the element of an incline to finish the pattern's range for extra bullish strength. Interestingly, a descending triangle sharing the same downtrend line as an early bearish reversal from early December leads to a lessened drop despite sustained spikes in selling volume. This is because of the stronger support potential from the uptrend line intersecting with previous highs in the IPO range. The stronger support potential materializes as an inclined double bottom completes. However, selling pressure is still constant, and the descending triangle range provides immediate moderate support to strong resistance. Price action is neatly contained within the outlines of all three patterns to highlight their stability and validity. This is a great example where clear patterns in close proximity to each other tend to produce rapid short-term fluctuations. This is normal as seen with other examples during the initial stages of a stock chart after an IPO. A reverse head and shoulders has the potential to lead to new record highs as the aggressive uptrend begins to stabilize back on support offered by the neckline range. This is another case where the neckline is widened, except instead of a noticeable large gap, it is mainly due to the influence of the contentious 3087 to 3025 range in close proximity. This 30 range is almost as influential as the IPO range, due to it being in the middle of several clear patterns and swing points. Like the previous patterns, the reverse head and shoulders has price action neatly contained within its outline to add stability and validity. The only imperfection from strict theory is the aforementioned wider neckline and asymmetry between the left and right shoulders. Price action is also holding over support offered by the wider neckline that benefits from the old descending trend lines now presenting greater support potential as they reverse rolls. A steeper incline is maintained after the minor gap up in May is just barely filled to produce a steeper but still stable incline, while at the same time bullish volume remains constant in between minor normal bearish retracements. Interestingly, the larger uptrend line continues from a compact ascending triangle within the May gap up range. The early stages of this stock chart are a reminder of the rapid fluctuations that often take place during at least the first year of trading. This leads to the common overlapping of significant ranges, shared by patterns in close proximity to each other.